Bitcoin price dip may end Thursday as Bitfinex bids hint at Fed buy the news plans. Hi there, welcome to Crypto City, your daily plug for crypto news. Before we dive into the topic of the day, let's raise the crypto army by hitting the like and subscribe button. Without any further ado, let's dive into the topic. Bitfinex traders are betting on some upside following Thursday's Federal Reserve comments on inflation and asset purchases. Bitcoin, BTC, could see its last day of downside as buyers line up to cash in on Wednesday's United States Federal Reserve meeting. On December 14th, bids began increasing on major exchange Bitfinex in a conspicuous sign that the market believes BTC, USD is destined to gain. Time to sell the rumor, buy the news? The Fed will deliver key information on the future of asset purchases, a form of quantitative easing, as well as inflation at the meeting, and bets are rising about the knock-on impact for both crypto and traditional markets. Data from Bitfinex's order book suggests that Bitcoin traders are eyeing an opportunity to buy the news. As Cointelegraph reported, the Fed tapering its asset purchases effectively limits the availability of easy money, and accelerating the process could pressure risk assets such as Bitcoin until a slackening of policy returns. For the short term, however, a buy-up would echo events from last month's inflation data print, this producing a conspicuous but short-lived boost to BTC. Bitfinex traders lay in wait in an area roughly between $44,500 and $46,000 Tuesday, with spot price currently at $46,800 after a day of losses. Think FOMC has a good chance to be a sell the rumor, buy the news event, analyst William Clementi added. Pair that with illiquid supply back at yearly highs and some large Bitfinex bids coming in. Just waiting for $53,000 to start bidding. Happy to miss some of the move and essentially pay for confirmation. Bitcoin traders anything but docile. Elsewhere, evidence of increasingly bearish whales persists on exchange order books. As noted by Material Scientist, creator of on-chain analytics resource Material Indicators, large volume traders have been continually selling since October. They've not bought a single dip since October and have been straight up twop selling all this time, Material Scientist commented on Twitter. Some exceptions have hit the headlines, and whales, the largest volume cohort of exchange activity, have exhibited buying interest. Yet according to the data, $60,000 resistance is still increasing with time. We have yet to see any of the BTC dips over the last month bought with real conviction. Material Indicators added in a separate post. Bitcoin's drop to $42,000 obliterated its open interest and liquidated a large swath of leveraged traders, but analysts say OI resets typically provide great buying opportunities. The weekend is upon us and fear remains the dominant short-term sentiment in the cryptocurrency market. Earlier on December 11th, Bitcoin, BTC, price dropped to $47,250, and investors are biting their nails after data from the United States Consumer Price Index, CPI, shows inflation reaching a 40-year high at 6.8%. Data from Cointelegraph Markets Pro and TradingView shows that a midday push by bulls to reclaim the $50,000 support level was handily defeated and sellers sent the price back below $48,000, which could possibly force another daily lower high for the top-ranked cryptocurrency. With the prospect of a major run-up in price to end the year all but dashed, traders have shifted their attention to managing risk and identifying the best levels to buy dips. Here's a look at what analysts are saying about Bitcoin's outlook heading into 2022. Open interest wipeout will give way to further upside, as seen in previous instances where the price of BTC saw a rapid decline. There has been a significant decrease in the open interest, OI, for BTC on derivative exchanges, as highlighted in a recent report from Delphi Digital. The report noted a 50% decrease in OI after this latest market downturn, as over-leveraged longs positions were decimated. While the experience was likely an unpleasant one for traders who were overexposed, the analysts suggested that deleveraging events like this are beneficial over the long term and will often give way to further upside, as the previous froth and over-exuberance are replaced with a more measured trading environment. The sharp reduction in OI over the past month may also be signaling that the short-term bottom for BTC may be in accordance with Delphi Digital, and it's possible that the current sell-off could be reaching the point of exhaustion. Delphi Digital said, the 30-day % decline in OI for BTC has reached levels that previously signaled a bottom was forming, or wasn't too far out. Range-bound trading for BTC until 2022 according to Ben Lilly, co-founder of Jarvis Labs, the price of Bitcoin is likely to stay in this trading range until at least the end of the month. Mainly due to the fact that December 31st marks the largest open interest in terms of open contracts. Lilly highlighted previous instances of major drawdowns resulting in a high number of liquidations as part of the reasoning. He explained that the market has typically taken some time to build momentum after these pull, Lilly said. Luckily, for anybody wanting to accumulate on a weekly basis or at the bottom portion of the current trading range, this is a great setup. Should traders look for continuation of the uptrend? The final bit of insight was provided by analyst and pseudonymous Twitter analyst Rect Capital, who posted the following chart of BTC price trading between two key exponential moving averages. Rect Capital said, overall, BTC is consolidating inside the two key EMAs right now. Just like in May 2021, and just like in May, continued price stability and consolidation in between these two EMAs will precede new macro uptrend continuation. The overall cryptocurrency market cap now stands at $2.238 trillion and Bitcoin's dominance rate is 40.7%. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph.com. Every investment and trading move involves risk. You should conduct your own research when making a decision.